Ladies and gentlemen, welcome back to another exciting episode of the Crypto Market Update. Today is October 30th, 2024, one day before our glorious holiday of Halloween. So good luck to all you spools and specters out there as you traverse the streets, hopefully with your kids, maybe looking for Halloween candy. But just keep Bitcoin in the back of your mind as we proceed through this night. We are, of course, just a few days away from the upcoming election in 2024. And I'm just going to go out there. It seems to be the sentiment across the crypto space is thus, that if Trump wins, the Bitcoin rally will continue. However, the sentiment seems to be that if Harris wins, that this will be the double top of 2021. So the question we need to ask is the top, or is the future of the Bitcoin cycle, is the 2024-2025 Bitcoin cycle going to be determined on November 5th? Only time will tell. Until then, let's just stay committed to the facts, the truth, the data points, the strategy to continue to enrich ourselves and improve our lot in this life. And for that, we turn to the charts, guys. Let's get cracking. All right, first, let's start off as we are wont to do with Bitcoin on the weekly time frame. Let's just get zoomed in and see exactly where we're at, what's going on. All right, as we can see on the weekly time frame, we still do have a strong weekly candle pushing up from the previous week, as we discussed yesterday, following this kind of breakout from our consolidation range here as we cleared, coming out of the support of the super guppy band range that I was talking about yesterday. Again, a great indicator to put on your charts. I've enjoyed using this. It's a very nice visual representation of where important support and resistance levels are. I want to get just a little bit more, let's get a little bit more sexy with it. Okay. So, as we can see, price is attempting to close above the upper boundary of the Bollinger Band, which is a good breakout indicator. If price can successfully close above the upper boundary of the Bollinger Bands, we often get more rapid punctuated acceleration like we can see right here, i.e. price going vertical straight up and get a nice breakout. Of course, until then, we are, of course, just waiting to see. Today, we have not had the follow through that we wanted. We'll see that on the daily time frame. Again, we can see that the visible range volume profile is confirming, as we discussed yesterday, that range between about $66,000 and about $68,000. The higher 67s, but 68 is totally fine as well, as kind of that intermediate support level where we would expect to see price pull back to. Currently, the point of control in the entire range, the mid range, would be about $63,000. So there are some out there calling for the pullback to be quite shallow to 67, 68. Others out there more expecting a pullback to the 63s, to the 60s. Again, if we are going to reject from this area and pull back and not have an immediate breakout, those are the levels that we want to be watching for areas of support. As we talked about yesterday, I am quite optimistic that we are going to see the market cycle unfold as we have in previous cycles, with punctuated equilibrium, moving into the price discovery euphoria phase of the market cycle, because we have not had that yet. On-chain metrics confirm that. So that hasn't happened yet. So we are just looking for that punctuated equilibrium. And the weekly time frame is not overbought. Normally, the weekly time frame remains overbought for quite some period before we actually do get an end to the momentum. And as we have had a long period of compression right now, quite a wide range, quite a bit of compression of price range, a breakout right now would be quite feasible. If we don't break out here, what you're going to see on your timelines is everybody beginning to pile on to the idea that this is a 2021 top where we double top and then sell off. On-chain metrics don't really suggest that right now. They're not really looking to confirm that. All right, so that's where we're at on the weekly. Okay, obviously things looking very good, things looking bullish on the weekly, on the precipice of a genuine breakout. Now let's go to the daily to see how current price action today has unfolded. Let's just get zoomed in on here. All right, we'll turn off VRVP. And the key thing that I want to point out here, obviously we had the nice breakout long signal from the GAN swing high-low indicator here on October 14th. That has progressed nicely. We did get a short sell side indicator here. Time transformation confirmed hidden bullish divergence here, and then confirmed a crossover, another good entry. So basically, anytime, this is the way I work. If you're familiar with the channel, this is how our strategies work. We use multiple indicators to basically initiate a trade and confirm a trade, and then we also look at things like volatility or volume to help confirm that trade even farther. Then we just simply set our take profits and stop losses, and then that's really all that there is. But what my purpose with this is to also highlight points of analysis for you guys, methods of analysis, things to look out for, and also cool indicators and ways to use them. All right, so we still have decision point momentum oscillator from Lazy Bear confirming this as well. It actually flipped on the exact same day, October 14th. So things are still progressing nicely. We don't yet see any reversal signs. The only thing that would be considered a reversal sign at this point in time is just the fact that we are appearing to be breaking out. We are at the all-time high, and anytime we're just at a high, that's a common level of resistance. So of course you're going to have you can always make the argument that, well, we're up quite high, it's very likely that we will reject. You can always make that argument. And in fact, it generally pays to be a pessimist and not be like, oh, we're banking on a breakout. Again, the nice thing about breakout trading, which is the majority of my trades, is that you can be fairly timely with your invalidation, right? You know, you can set a time limit, like, okay, I'm taking a trade on the daily time frame, so I'm going to give myself 1 to 2 days of invalidation. If price doesn't break out, I can close the trade and consider this a failed breakout. You can also use a more tight stop when you're trading a breakout, because people complain about this all the time, but you can go for the breakout trade, set the stop, maybe your stop gets hit, and then price goes to attempt to break out again, you just go again. All right, you need to be setting your, you know, essentially with these, another good strategy too is kind of like a starter position where you can open up a smaller position if you're hesitant about the breakout, of course. And then once you get confirmation of the breakout, price closing above a certain range, price moving a certain percentage, price clearing past the sell wall, whatever suite of indicators that you happen to be using, then you can add to that position as price continues to move up. Overall, the other key things that I'm seeing here, as I pointed out yesterday on the daily time frame, we are nowhere near overbought with our momentum oscillators. And if we look at volatility, we can see that volatility got crushed from October 24th. Of course, this is a bit of a lagging indicator, but again, it's still one of the best indicators we have. We can see the volatility visually compressed from October 16th, October 15th to the breakout following October 26th, just several days ago. And here we have the beginning of the expansion. So over these 2 days, the 26th and the 27th, the Bollinger Band Width Percentile indicator from Caretaker reached this low volatility critical level. And the way that we trade this signal is once those conditions emerge, we then trade the resulting movement in the dominant direction of the trend. It's the most common way I've heard this strategy used. We have a trader on team who this is his primary way of trading, and it does quite well for him. And I enjoy using it this way as well. So you can use a momentum oscillator as well. Here in this situation, how would you have known to go long rather than short? Well, you know that we have critical low volatility right here, and you're seeing that as kind of your precondition for entering a trade. You could say this is your confirmation, and now you're looking for initiation. Your initiation signal is going to be, let's say, you know, it could be a more price action initiation where price is breaking above a previous high. Okay, so you would have gotten in on this candle. Or you could use a momentum oscillator, which is what I like to do, and simply say, okay, well, once we've reached this level where I know putting on a trade is good, I'm just going to trade in the direction price moves following a momentum oscillator cross. All right, it could be either a fast slow cross like time transformation here, or it could be more like a threshold cross if for example, you're using an indicator with just one line and set a threshold. Like, okay, well, if it crosses over 20 or if it crosses over 40, over 50, whatever your indicator happens to be, whatever that happens to look like. But other than that, on the daily time frame, again, we do have a bit of a pullback. Not really even a pullback. We have indecision today. Price did move down. Let's see here. Let's get zoomed in. Price did, again, opened up at about 72,768, and it pulled back about 2%. So liquidating 50x leveraged longs who bought at the very top. Again, we did reach a price yesterday overnight of about on spot of 73,600, just a tiny bit higher on futures. But overall, people are saying on Twitter that spot is fading this movement. And that doesn't make any sense to me. That sounds like some pseudo-intellectual nonsense. Like, what do you mean spot is fading this movement? We had amazing ETF inflows last week and are on track for great ETF inflows this week. That's spot. Spot is not fading this movement. Spot is buying Bitcoin. All right. For spot to fade a movement, the only logical thing, the only way that works or would make sense is if I were to pull up the futures chart of Bitcoin right next to this, and the futures chart would have to be going up and the spot price would have to be going down. Of course, that can physically happen, but I've never heard of that happening. That's kind of nonsense. All right. So anyways, onwards and upwards. Taking a look at USDT market cap dominance. All right, this is very important. This is just a good confirmation of which direction the market is going. If we're seeing USDT dominance moving up, it means that people are moving into cash. If USDT dominance is moving down, it means that people are moving out of cash and into crypto. And this is the hourly. So as we can see, from October 25th to, again, still just now, we have this massive dump in USDT dominance. All right. So obviously this is just showing you all of the money, all of the USDT being converted into crypto. That's quite bullish. Let's look at the daily trend, and we can see that USDT dominance is actually in a downtrend and has been in a downtrend since about the beginning of September. All right. So the kind of this quiet downtrend, we had a rebound towards the end of September for about a week and then continuing on downwards again. So USDT dominance in a downtrend, Bitcoin in an uptrend. Things are looking pretty good to me. All right, diving into the more short-term price action here. Bitcoin on the hourly time frame, we can see so this is a pattern that I want you guys to remember from yesterday's video, where I pointed out a great tactical use of the Guppy EMA script. Whether you're using Super Guppy, whether you're using Chris Moody's script like I am, it doesn't matter. This is a pattern that I've noticed on the daily, and this is also a pattern that I've noticed on the hourly. All right. So what we have here is when price is in a strong uptrend, which is characterized by the fast band of exponential moving averages being above the slow band of exponential moving averages. When that occurs, when price pulls back in this bullish trend, it likes to come down to the bottom, or it doesn't even have to come down to the bottom. It can bounce off the top, it can bounce off the middle, but this area is a magnet. And when you have a bullish trend, the odds are going to be in your favor to take continuation trades, to continue to trade in the direction of the dominant trend and to buy pullbacks. Where do you buy said pullbacks? You buy pullbacks when price interacts inside this slower band of moving averages. All right. Now, for those of you who want to trade on the lower time frames or do that day trading type stuff, then you can also look for patterns or characteristics of how price performs or responds with interactions with the fast band. That's totally fine. We'll look at the 3-minute chart here in a little bit. But here on the hourly, which is probably my second favorite time frame to trade next to the daily, we do see, again, price likes to come down to the 55, likes to come down to this EMA band. So buying pullbacks here and looking for rallies out of these areas is a good trading strategy. It is a good entry strategy, and then you can figure out the take profit strategy, whether they're fixed percentiles, the Quadriga ATR method like we like to use on this channel, or anything else. It's totally fine. That's up to you. But finding good entries is half of the battle. And when price pulls down into the guppies, that's a good place to go long or trade in the dominant direction of the trend. Your direction should be, the direction you trade in should be dictated by the dominant trend. As a trend following trader in this type of situation, I would never go short. I would never go short. I don't trade reversals when I can help it. Sometimes I can't help myself. I'm not perfect, but my trading rules for my strategy say that I trade in the dominant direction of the trend, because regardless of what the chart looks like, regardless of what my impulses tell me, regardless of how I'm feeling about the trade, I know that if I just simply resign myself to only trading in the direction of the trend, more often than not, I am going to have more winning trades and less losing trades, because it's easy to get tunnel vision and see, price action or a volatile candle and think, oh, okay, well, that's the end of the bull market, or that's the end of the bullish trend, then I'm going to get ahead of everybody and position to the short side. More often than not, you're wrong. And you time it wrong, you're just completely wrong on direction, and you go short, and several minutes later, price just rips to the upside, because price has been ripping to the upside for a while. You should take note of that and trade in that direction. It's really that simple. It's hard to do. I'm not going to lie. It's hard to do because, and I think it's especially hard to do if you're active in the crypto community. If you're on crypto Twitter, if you're in Discords, if you're in trading telegrams, then a lot of what you're going to see is price action trading, smart money concepts, things like that. Now, I'm not deriding that style of trading. Obviously, I've made my opinions quite clear on that, versus how I feel about it versus how I trade. I obviously don't trade that way. But a lot of the people out here making content are just chart warriors, okay? They're LARPers. They don't actually really trade with size. They make their income from talking about trading rather than trading, all right? Probably a good example because, I mean, yeah, we only have 24,000 subscribers. We don't get that many views per video. So the following that we have is quite loyal and tends to be dedicated to logic, facts, and actually improving their trading. I wouldn't be doing this after 5 years. I wouldn't be a full-time trader for 5 years. I'm certainly not making my money off my influence. Let's just put it that way, all right? But anyways, I digress. So let's get back to the charts. So again, looking for that entry here is just a good, these are good opportunities. Now, the other side of that coin that we talked about yesterday is that when price closes below that guppy band, closes below, in this case, the 55 exponential moving average, then that means that the trend is over. It doesn't mean that you should immediately short. More often than not, price will then rally one more time, but it'll be a lower high, and that is the high that you actually want to take your first short entry on, anticipating a downtrend. All right, so that's the only time I would recommend trading a reversal, but I don't even really consider that a reversal because that is a bearish signal that we've gotten. So we're no longer trading, you know, and for this to even happen, price will have had to be moving down for a while. So you're not even really trading against the trend at this point in time. You're seeing that the trend is exhausted and is likely to break, because that's just how crypto is. That's how really all markets are to a degree, but certainly cryptocurrency. It's very momentum based. When price starts moving, everybody piles in and magnifies the movement. And the key thing for you to just spot and identify is when that exhaustion ends. You can look at lots of metrics. You can look at on-chain metrics to see when money is drying up, to see when there's some discrepancy in futures positioning. You can look at options flows. You can, of course, just look at price action. You can just use technical indicators like I tend to do. But identifying when the trend is exhausting itself and about to pivot to a new trend is often the most tactical times to enter into a trade. So identifying those types of indicator signals, you should make identifying those types of indicator signals very important in your set of priorities for constructing a strategy. All right, so in this case, I will not be going short on Bitcoin until we are able to close below 71,102. We'll close below that. If that happens, we will then rally a little bit, and then we would be looking for a pullback back to those levels that we were looking at on the weekly and daily time frame. But as far as the hourly goes right now, we are holding that upper boundary of the Bollinger Bands right now. We are having a lot of tight price compression. We can see BBWP hasn't really dipped yet, hasn't really made a move throughout almost any of the consolidation for the majority of today's trading day. So what are we looking for here? Well, we had volatility peak twice over here. Look at it, peaked here and then went sideways for a while and then broke to the upside and then peaked again, calling the top. All right, so we always want to be generally closing positions when we see volatility reach a critical high. That's kind of telling us, hey, the market's getting frothy, get your profits and get on out and just wait for the next opportunity. So the market hit a peak at about almost 74,000. 73,666 on ByBit. So they're sick and twisted over there. They got some jokes, but price now moving sideways and it's been moving sideways for the majority of the day. Not a lot of bigger swing trading activities. So I think the best case scenario right now is, of course, we want to trade in the direction of the trend. So the logical idea here is that price is pulled back a little bit and that will continue and break to the upside. So you can either pre-position early, which I would recommend waiting for volatility to drop lower and getting a clear signal. Don't be doing this based on your kind of ideas. So wait for a volatility signal or wait for that actual breakout, right? Wait for price to actually break and close above something like 72,600 or 587 in this case, so that we know we are actually making a sustained, or not sustained, but significant move to the upside. You know, we can speculate on whether or not it will be sustained, but we want to be looking for something specific. We want to be looking for something meaningful, right? And we really haven't had too much meaningful price action today. So that's scenario one that you want to watch out for, continuation of the bullish trend. Of course, you can just say, hey, price is pulled back. I'm going to buy the pullback. I think it's going to go up. That's perfectly fine as well. Just make sure to be using your risk management effectively so that if you're wrong, you don't lose a lot. The second scenario that we're going to look out for is if kind of the momentum has petered out for right now and we're going to have a more pronounced pullback, what we're really looking for confirmation of that on the hourly is that close below 71,000. That's when we could contemplate going short on the hourly time frame and, you know, not even fading the breakout, but just riding that pullback down to that $63,000 level, whichever it's going to be. So just a little bit more granularity here on the 15-minute time frame. We can see the volatility peaked here on the 15-minute time frame, almost peaked here. But of course, you know, I don't just wait for these red signals. I of course take into context that, of course, yes, well, we're very, very close in this area. Plus we have time transformation giving us exit signals as well. So that's why multiple indicators can really help you find confluence. Be careful with that. Too many indicators can just be confusing and make you feel like you're seeing things that you really aren't. And it can be overwhelming. So again, you can see that I only have at this current point in time 3 indicators on my chart. That's usually all you ever need at any given time. Although I do use 5 indicators in my strategy, but 2 of those indicators only go on the chart when I'm actively in a trade and I'm not looking for an entry. So, and that's my, well, 1 indicator only goes on when I have identified a trade, and that tells me my take profit and stop loss, and then that goes off the chart. And then the other is only on when I have an active trade on, and that's my exit indicator, which in this case is actually the same as my confirmation indicator time transformation. So anyways, so yeah, we can just see just a little bit more granularity, price peaking, pulling back, making lower highs, kind of forming this rectangle or, you know, kind of sloppy descending triangle pattern here. We do have a breakdown, a deviation below support, big buys stepping in. And so far they have been able to hold that higher low, but they also haven't been able to break the glass ceiling. So if you're looking for a little bit more granularity, earlier we said 72,587, which would kind of be this level. But if you want to be a little bit more granular, you could swing for a breakout if we were able to close above something like 72,534 as well. So either of those are perfectly acceptable as far as breakout targets or breakout strategies. All right, briefly looking at our altcoins here. Let's just keep it on the daily. So the altcoins we're going to be looking at today are of course going to be TRX. Now, again, I don't like too much to toot my own horn, but we've been long on TRX for a long time in our community. This is something that we've called out 3 times in the past 4 months. TRX, you guys can go check our results at results.krakencryptocurrency.com. And TRX is just doing quite. It's just wonderful right now, guys. I don't know what you want from me, guys. It's just doing it's so good. Let me just need to save this indicator template real quick. There we go. So on the daily time frame, TRX not quite. Actually, yes. Sorry. So on the daily time frame, TRX making a higher high. Breaking above its previous high as we're currently speaking. So price currently trading at about 0.16939 and breaking above that previous high of 0.16869. So TRX doing quite well, especially after a long consolidation period right here. Again, look at these pullbacks to the upper boundary of the guppy. Again, all of these great targets, pullback buys. This is the strategy that you guys should be looking for. Identify something in a dominant trend and then buy up those assets. All right. We are peeking our head into overbought territory. So that either means that we're going to have punctuated equilibrium where we will stay overbought for several more days and really stretch up and make a higher high before we do see a correction, or it does mean that we are going to be seeing something like a double top here and that this is a deviation. Either way, TRX definitely something to keep your eyes on, and an asset like this is something that you can really switch over to futures mode and kind of get crazy with it. But again, just to highlight the strategy here, again, we see an opportunity. We see volatility spike here, kind of telling you that you should not be short anymore. And then we see volatility spike here, which tells you you should really not be long anymore. Price pulls back. You've taken profits here. You've taken profits here. Price pulls back. And we just wait until things get boring and we get that low volatility signal, right? And we're also bouncing off the top boundary of the guppy EMA. We're in a bullish trend as identified by the blue bands over the green bands. And this is where you enter long. This is where you enter long. All right. Or you could wait a few more candles for the crossover and the physical breakout of the previous high. Get long here, and you're holding on to this position until, again, right about now is an area where I would be looking to take profit because we are, again, maybe not right this second. I would be patient and see if we're going to break out. You always want to know when to put the foot on the gas. And in a situation like this, if we start putting in big candles, I would just double my position. I just put more, put my foot on the gas. But we are touching into overbought territory. So if I were to see a rejection here, that's when I would close the position and get out of the trade. All right, Cardano. All right, Cardano has been in a bearish daily trend for quite a while, all right? But I want to point out that we seem to have put in some significant lows down here around 30 cents, all right? So we put in this low here. We have a deviation below that low and then a higher low. So almost like a nice inverted head and shoulders pattern right here that we are now attempting to break out. So we've definitely gained some ground. We have moved kind of our lows up from 27 cents up to 30 cents up to 31 cents, all right? And even more significantly, 33 cents. So it does seem like we are attempting to break this pattern right now. Cardano is probably going to move along like the rest of the coins. Plus we do have some, well, I guess it's controversial publicity because Charles Hoskinson came out and said that Cardano was going to be switching to a Bitcoin layer 2. It's kind of indicating that the Cardano experiment as its own unique blockchain had failed. But listen, I'll leave that up to the guys who know a lot more than me. But certainly, guys, remember that a rising tide lifts all boats. Altcoins are going to put in more price performance than Bitcoin. Of course, Bitcoin has the potential to rise maybe what? We go to 70 to 100K. So that's a 30% increase. Well, that's not even a 30% increase. And, 150. I mean, Bitcoin is going to, at the most, 2x. You know what I mean? 70 to 140, it's going to 2x. Most altcoins are going to, 5 to 10x. And then, of course, the lower cap in risk you go down, or excuse me, the lower cap you go down, the higher in risk you go. I mean, you're looking at 50 to 100x's. And of course, that's what everybody wants. But I will caution you against this. There's nothing wrong with picking up some coins that look attractive. But if you want to trade, if you want to be a tactical trader, you want to be getting in and getting out of positions without thinking about portfolios or holding coins or any of this such nonsense, then you need to get good at trading something that has high liquidity, because that's something that you can trade. So get good at trading Bitcoin, get good at trading Ethereum, and then go elsewhere, and then start expanding. Get good first, then you can take more risk. If you think you're already good enough, you're not. You're going to get wrecked in the altcoin markets, guys. So as always, trade safely, be good, and I will see you guys tomorrow. Cheers now.